All right, how you doing, everybody? Good to have you here today. Doing well. Okay, I am releasing a new system here today, and this is the first time that anyone is seeing it, really. And it's called Always In, my Always In strategy. So I traded it today for two winners, and it was a perfectly performing system. And what it is at the beginning time, so I have this set to start, I think it's at 6:30. It takes the price at 6:30 and it draws two dots above that price. And I can set the range, I can set the distance from that price. And I'm looking for breakouts. Like consider it like an open range breakout system. So price hits the upper dot, then you go long. If price goes down and reverses down to the red dot, you go short at that price. Price hit the blue dot, so I did go long at that point. However, I did chicken out and I stopped myself out about, I think it's a $500 risk. I stopped out with like a $300 loss. So this is silver. This is a heavyweight market. I should have gotten out earlier, of course. But what I did is I stuck with it and I went long again at the blue dot because prices moved up into the blue dot. Let me see if I can zoom in here for you. I hate when charts are so small you can't read them. So I did go long again. You see the blue arrow here, and then look at that. I chickened out again. Stupid place. Really, the strategy says you should go and hold on until you go short at the red dot. We never even hit the red dot. Um, but I'm tinkering. Maybe I should do that. So I was out another $200 there, so I was out 500 bucks. And then I went long again. I went long again at the blue dot, and this one paid off. I put my stop down at the red dot and I rode this trade out for a beautiful, right after about, what is it? I think 9 o'clock. This thing really started kicking in gear. Yeah, 9 o'clock is right here. Right then it just took off in a matter of minutes. We were zooming up and I got to a $900 profit target. So take a look at this strategy. This is the summary for it. If you trade it on Mondays, Wednesdays, Thursdays, and Fridays, Tuesdays are bad for this strategy. But Mondays, if I just traded this the last, I think it's like, oh my gosh, how many? Well, there's 22 Mondays involved. I think there might be like 30 or 30 some weeks of data on this chart. So 22 Mondays. Your total net is $13,100. That's trading one contract. So it's a 55% win rate, 37 wins, 30 losses. And that's really just trading in the mornings from 6:30 in the morning till 9:50 in the morning. And that's Eastern time. So really good numbers. And you're only winning 46% of the time overall. Profit factor is 1.3. Max adverse excursion is 400, 375. Not too bad. Now this is on each trade. And then the favorable excursion is 550. So you're doing some good numbers. I mean, hitting 900 bucks today was a good move. So, and Monte Carlo analysis here shows a 100% probability of a positive P&L. You don't often see that. The worst Monte Carlo analysis was a positive $1,850, which is great. Basically, all of the trades that we took 340 trades, but I took 170 samples of those trades and then I simulated over 100 iterations. And all of those combinations were positive on P&L. So really good. This is something you want to do also on Fridays. Now, Wednesdays and Thursdays, we could probably optimize those a little bit better, but Fridays is another $10,000 day. So this is a Monday, Friday strategy. Again, this is just 3 hours in the morning. Okay, so that was a good win today, but take a look at what crude did. Now this is the same strategy. It's called Always In. Crude just trading on Mondays shows about a $4,000 profit on 94 trades. So an average trade is 42 bucks. Profit factor is 1.4. That's pretty good on its own. Drawdown is about $2,000 drawdown. But if we go ahead and take a look, condense this, take a look at the last Monday. So this is how this P&L works out. So this is a week ago. This is on the 10th. So the blue dot, we went long at the blue dot. This blue line here shows the equity curve. Okay, just basically from entry and each close price, we look at how our equity moves. When we hit the target, so time went forward. When we hit the target, we closed in a profit of $450. You can see the green 450. Boom. So we exit out our position and we reset the grid now. Not really a grid, but we reset the buy and sell numbers. We went short here. We got stopped out. See, so the reversal happened. We went short at the red dot. We went down, which was good, but then it retraced up, and we went long at the blue dot. So we took our $450 win, and we went down and lost 200 bucks off that. And now we're long again. So we're long again. We're long again. And this is where it ends the day, and it's at 11 o'clock. So this strategy trades optimized from 7 to 11. Okay, but I want to show you what I did today because it did work out pretty nicely. I only took the first of these trades. Here's my arrows. I had a blue dot up here and a red dot down here. I went long right at that point, and this thing just chugged away. We really had a good move up. I saw it weakening a little bit here, and I decided to get out early, so I actually only got in and out at these levels. So my P&L was here for the first contract. I took two contracts. And my second one is I exited out there. So that was another 510 bucks on that trade. Worked out very nicely. Now, these are offset by I had, what, $500 in loss on silver. Again, because I took some early exits. So I took a loss. Let me show you here. From here and going right about here, I think. Yeah, $300 loss. And then I went long here and I got stopped out here like a chicken. So I took a loss of 300 and 200 here. So that's 500 bucks loss. I recouped 900 of it, so I'm up 400 on that point. But crude came along and I took 510 out of this market. So I was up about $1,000. It was a really nice day for me. I was happy, and I'm flat now. So that's it. That's my always in strategy. Um, it could produce more trades had you go back and forth here, back and forth. I could have certainly stayed in it, um, but I was happy with my 1,000. And crude actually, look at that. We didn't get much past that. So we took a loser here. So we took our 450 down to 250. The end of the day when we closed out with a net gain of what is that? It's hard to see. 370 right there was our closeout. So we didn't quite hit the target on this long. Target is this green dot. We did eventually, but again, we close out this trade series at 11 o'clock, and that's what it was right there. So we ended up with positive 370 if you would have traded all of it. Um, I think I'm going to stay nimble though, and um, I'll probably do some break-even trades. So if I'm in profit, which is in this area, by a couple of bars, I'll move it to take to a break-even, and I'll go look for long to reset and maybe break through that lower level. Having maybe go short at this retrace level, so I would have gone short here. And if I was smart, I would have put a break even as prices moved into profit, and then I would have been out here. So otherwise, you take a full loss, and the full loss strategy shows there's only what $200 full loss if you take the full hit per contract. All right, so I'm excited to hear your feedback on it. Let me know your thoughts. I would entertain any questions you've got, and I look forward to hearing from you. God bless you, and I wish you nothing but good things. Thanks. Hello, traders. I wanted to go over spreads with you. How many of you trade spreads? Okay, it's actually a trick question because everyone is trading a spread. It's hard to believe, maybe you haven't thought about it this way, but when you exchange dollars for a futures in a contract, you're actually spreading dollars against uh, the futures contract. So you're going short dollars and you're going long on futures. So you're actually always spreading something. Well, this is interesting because dollars aren't always correlated very well to an instrument that you're looking to trade. The stock market or futures instruments, commodities or precious metals. So what we do is we spread correlated things together. We spread instruments that are correlated one to another. In this case, this is the high-grade copper against the silver metals market. This is an interesting spread here. The blue candles, price bars, are really the spread value as time went by today. And I wanted to show this to you. This yellow line is the midline. It's the middle price of the day. So as price moves down and finds a new low, the middle price of the day will go down, 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 down as well. But because spreads tend to revert back to the midline, that's a very key and important kind of a reversion area. Now, when things do get out of whack, and they often do, you do see this big trend in the spread. So this is going long 2 contracts of copper and short 1 contract of silver. And that's because silver moves more than copper does. Silver has a bigger range than copper. So we need to buy 2 contracts of copper to equal the 1 movement of silver. And I want to show you here what we did. One way to trade this spread is to we look for our cycle dots, these green and these magenta dots, green dots and magenta dots. It's a real simple cycle oscillator. When we're oversold, we start printing green dots. And when we stop printing green dots, we're in the middle. And then when we start printing magenta dots, we're in an overbought area. So technically speaking, you could just trade that as a signal itself. But what I like to do is I always want to go toward the median. I don't want to start selling spreads as they move away from the midline. In this case, I would have looked at buying right after the green dots stopped. Now again, the green dots print when we're in oversold. When we get out of oversold, we're moving up, and that's when we get rid of the green dots. So this would be a good buy spot right here. We had a couple dollars in move. So each band, this yellow band from top to bottom is a $500 equity change. This black zone is also $500. So we alternate $500 here. So had I gone long here, I could have stopped out probably at break even when the pink dots started coming in, but the max move was about maybe $400 in profit. So we go down, we slide down. Green dots stopped printing here. You can go long again, put your stop below that swing low. You had another $400 or $500 move when prices spiked at 9 o'clock. When we go down here now, look at this. If we would have gone long after the green dots stopped printing, which is right about here at 9:26 in the morning, hold on to that, put your stop down below the swing low, and ride this spread up. Now, copper recovered very nicely, still against silver. Copper was quite oversold. We were down here in this area, 9 o'clock, 9:30. Copper boomed. Copper boomed. Now again in the spread, you're long 2 contracts of copper. So when copper moves up, you're moving up at a pretty good clip. And that's what happened today. So we actually moved from down here, so that's 500, 1,000, 1,500 to the middle. The midline is 1,500, 2,000, 2,500, 25, 700, 2,700, up to that point. So it was a good move in this spread today. Something to definitely take advantage of. One thing I can draw your attention to as well is these green dots, very faint green dots, and the red dots here. And they show historically what's the average location of the spread in relation to the midline. So every day we calculate where the spread is every minute of the day, and we average them every minute of the day. So the 9:45 time shows the average spread price is right up in this area. So that's good information. We look over, I don't know how many days I've got here. Let me check. 15 days, calendar days. So 15 days, price is usually above the midline. This gives us impetus or gives us a reason to buy the spread. Now we're going into a period of weakness typically because the spread went down, but then it went up and there's some strength coming into the noon uh, time session here. Right about noon, we see weakness in the market and it's weak all the way down until the end of the day. Um, so we were catching the swing. That would have been a great time to go long. Again, you're looking at buying at the end of the green dots printing and put a stop down here and go toward the midline. You're always going toward the midline. And this was a $1,500 spread move. Something to think about.